Why Japanese autos might become more attractive to U.S. customers. A closer look. Why Japanese autos might become more attractive to U.S. customers. A day after the United States reached a trade deal that imposes a 15% tariff on imports from Japan, President Donald Trump declared that U.S. business would boom. But early reads from auto analysts paint a murkier picture. If anything, some experts say Japanese companies may benefit more than their rivals. For now. I do think the 15% tariff on vehicles imported from Japan is unfair for American automakers, especially if the latter are paying a 25% tariff on their Mexican and Canadian production exported to the U.S. Morningstar research analyst David Whiston wrote in an email to the Washington Post. Trump announced Tuesday that the U.S. had reached a massive deal with Japan to levy 15% tariffs on Japanese imports, including automobiles and auto parts, instead of the 25% rate he threatened earlier this month. In exchange, Japan will remove trade barriers for U.S. auto and agricultural imports and invest $550 billion in the United States. It was the latest trade agreement the Trump administration has announced in recent weeks, as it races to complete deals with scores of countries it has threatened with high levies. This deal will create hundreds of thousands of jobs. There has never been anything like it, the president wrote on his social media site, Truth Social. The big three U.S. automakers, General Motors, Ford, and Stellantis, do not share Trump's confidence. Matt Blunt, president of the American Automotive Policy Council, a lobbying group that represents the three automakers, said it was still reviewing the deal. But Blunt, a former Republican governor of Missouri, said in a statement that an agreement that has Japanese automakers paying a lower tariff rate on their imports than U.S. companies pay for parts is a bad deal for U.S. industry and U.S. auto workers. Trump's tariff twist. Why U.S. auto CEOs are cool with Japan's advantage. In a surprising turn of events, U.S. Commerce Secretary Howard Lutnick has revealed that the chief executives of American automotive companies are surprisingly accepting of President Donald Trump's recent trade agreement, which proposes lower tariffs on vehicles imported from Japan compared to those manufactured by U.S. firms in Canada and Mexico. This statement, made on Thursday, has raised eyebrows and sparked discussions about the implications for the American auto industry. Lutnick dismissed concerns raised by a coalition representing major automakers like General Motors, Ford, and Stellantis, who argue that Trump's trade strategy could unfairly benefit Japanese car manufacturers at the expense of the so-called Big Three Detroit automakers. "Oh my God, that's just so silly," Lutnick remarked during an appearance on CNBC's Squawk on the Street, responding to the criticism from the American Automotive Policy Council. The trade deal, announced by Trump on Tuesday, includes an agreement from Japan to accept a 15% tariff on cars exported to the U.S., alongside a commitment of $550 billion in investments in the United States. In stark contrast, American auto manufacturers will face a hefty 25% tariff on vehicles produced in Canada and Mexico that are imported into the U.S., a policy that was enacted by Trump back in April. Following the announcement, shares of Japanese automotive giants such as Toyota, Honda, Nissan, and Mazda surged, reflecting investor optimism about the favorable terms of the trade deal. However, U.S. carmakers expressed significant concern over the potential competitive disadvantage they might face. Matt Blunt, the head of the American Automotive Policy Council, voiced strong opposition, stating any deal that charges a lower tariff for Japanese imports with virtually no U.S. content than the tariff imposed on North American-built vehicles with high U.S. content is a bad deal for U.S. industry and U.S. auto workers. In Lutnick's view, the discontent expressed by some industry representatives is being exaggerated by public relations professionals. He mentioned that he had spoken with the CEOs of the companies represented by the council earlier that day, and they did not share the same level of opposition to the agreement. They are cool with it, he stated, indicating a level of acceptance among the executives. While acknowledging that U.S. companies might feel disappointed about the reduction of tariffs on Japanese imports from 25% to 15%, Lutnick emphasized that American manufacturers could sidestep these tariffs entirely by relocating their production facilities back to the United States. Come on, there's no tariff if you build it in America, he asserted. American manufacturers are going to do extremely well in America, as long as they build it in America. You build it in America, you're good. Despite Lutnick's optimistic outlook, the reality is that Trump's tariffs have already inflicted significant financial damage on the big three automakers. General Motors, for instance, projected a loss of between $4 billion and $5 billion for the year due to tariffs, and recently confirmed that these tariffs cost the company $1.1 billion in the second quarter of 2025 alone. Similarly, Stellantis announced on Monday that it anticipates a net loss of nearly $2.7 billion in the first half of the year, attributing part of this loss to the ongoing impact of the tariffs. As the debate continues, one must wonder, is this trade deal truly beneficial for American workers, or does it favor foreign manufacturers? What are your thoughts on the implications of these tariffs? Join the conversation in the comments below.